Hello everyone and welcome to this week's Figured 101 on creating a forecast. This is the final webinar in our series. We've already gone through building out what happens in the past, which is understanding our now. We now know how we can look at the direction for the future of the farm, the where, and that was with scenarios, which was last week's webinar. And this week we're going to be looking at how we bring all of that together by building out a short-term plan. Today, you're going to be seeing how we build out budget data into trackers, how we can plan for your diversified enterprises, and how you can regularly use that to report on variances. Because that's one of the real strengths of having that integration with Xero, is knowing that you've got your actuals automatically flowing through, and then you'll have your forecast inside of Figured, which is already matched up to the same set of accounts and the same structure. Without further ado, let's dive in. And of course, this is your UK team that's with you today. So you've got myself, Nick, we've got Paddy on the call as well, who's our customer success specialist, and then James Higgy, who's in the channel lead for the UK. As always, if you have any questions while you're using Figured, please reach out to us using that green chat bubble that's on the bottom right-hand corner of every page in the product. That's your live link through to our customer success team. We can answer your questions on the spot. And if there's something that we can't explain over text, we're always happy to pick up the phone and give you a call. So that's inbound for chat support and then outbound phone support. You can also find all of our help docs through that chat bubble and on our help center, help.figured.com. You'll be receiving a copy of this slide deck as well, so you'll have all of these links available to you too. On our YouTube channel is where you can watch the previous webinars as a part of our 4-week Figured 101 webinar series, as well as other content and short videos about how the product works. And then on the Figured blog, you can learn about how other farmers are able to use Figured and the things that they use our product for. So you'll get some case studies as well as any new product updates through that blog. As a quick recap of where we've come so far, we look at Figured through the lens of understanding the now, the where, and the how. And this is a really convenient way to look at the different sections of the product. In our first webinar, we went through and we did a tour looking at all of the different parts of Figured and how they link together. Then inside of week 2, we went to understand the now, which was looking at creating trackers, understanding how the allocator works so that we can keep track of profitability throughout the year. Last week, we built out 5 to 10 year status quo scenarios that were built from Xero actuals by using scenarios to work towards where we want to take the business. And that was a really useful way to be able to go through, look at that plan, look at how we want to take the direction of the farm forward, and then putting that in action is the how. And it's that how that we then build out a forecast inside of Figured. We compare that regularly against our Xero data, and then that allows us to put it all in action so that we can direct our farmers through to the future. So that now, the where, the how, and that how is done through flexible planning. You can start planning inside of Figured at any point in the year. So you can use your Xero to form your opening position, save endless revisions of your forecast, and then review them later. We do that through the rolling plan that's inside of Figured, which is a perpetual rolling plan. That means that you can start planning from today or from this month all the way out through into the future. And you can plan for as long or as short as you need it to be. You can plan for multiple years, but I do want to emphasize that if you're looking at what if scenarios, I really recommend that you use Figured scenarios for that, because it's going to allow you to build those plans out a lot faster. Remember, a scenario can take anywhere from about 15 to 20 minutes to build out, whereas building out a forecast long-term like this is going to be a bit more of a time commitment because it's with so much more detail. Scenarios are for annual planning, and then the forecast is for that monthly into the future plan that we're going to compare against. Key to all of this is the concept of actuals and forecast coming together. So you'll see at the top of every single page inside of Figured is this global date selector, and that's showing you how much data is coming from Xero, so your actuals, and then how much is your forecast, so the work that's inside of Figured for the short-term plan. Depending on the date that you set your actuals to, that is right up into how much Xero data you're going to be having inside of Figured. So that means that zero will form your opening position. That's for your bank balance, that's for your VAT balance, and that's for all of your movements moving forward into the future. Normally, when you do your plan, if you're going into figured for the first time, you'll set that to actuals to last month so that you've got zero as your last month's worth of data. But if you need to build out a 12-month plan into the past as well, setting actuals to none will let you do a full year forecast by setting that opening balance to the end of last year. So this date selector and understanding how this date selector works is really important for being able to build out plans inside a figure. Then across that, you're building out your plans in 3 places, and the detail that you put into each of these places is determined by the detail that you want to get out. Generally, you'll at least be working inside of the trackers. That's where the income and expenses for production goes through specifically. So we looked at our livestock, our crops, our milk, our product trackers. We did that in our second webinar. We've got a planning grid, which should look quite familiar to you. It's a large grid of all of the accounts in the different months, and that's for your other income and expenses, so for your diversified enterprises too. So trackers is for anything that relates to production. Your planning grid is for anything that's related to your income and expenses. It can be done on both a cash or an accrual basis. And it's inside of that planning grid that Figured can calculate interest payments on overdraft as well. So you'll be able to enter in your overdraft limit, and Figured can then calculate what your repayments would be. Finally, we can build out a forecast balance sheet inside of Figured, which is done in the financial position page. That's for entering in assets and liabilities, building out a forecast balance sheet, repayments, and for creating a difference between the book and the market value of your assets. That's great if you've, say, got property inside of another account, but you want to build a consolidated balance sheet. You can enter all of that into the financial position. Same for planning things like loan repayments. Same for planning things like asset purchases, like buying a new tractor or investing in some new machinery. So we're planning inside of 3 different places inside of Figured. The trackers for production, our planning grid for the remainder of our cash flow, and then the balance sheet for our assets and our liabilities. Going into a little bit more detail on that, there are a few different differences in the way that you're going to be entering in data. Now, I'm going to take you through this as a conceptual level now, and then in a little bit, we're going to dive directly into the product, and we're going to look at the practicalities of that by entering in a forecast through a stock balancer, as well as entering in our crops forecast. They are a little bit different because livestock is perpetual in that the stock that I had last year is still going to be the stock that I have this year. We use the Reforecaster if you want to enter that into your forecast in the same format as a stock reconciliation. So if that's something that you're already familiar with, maybe you're an accountant and you regularly build out these reconciliations for your clients for the end of the year, using the stock Reforecaster inside of Figured should look really familiar to you. And that's for entering in movements by month, by pound amount, and by stock class. We went through stock classes in that second webinar as well, and we looked at how that gets mapped through to zero inside of that. So if you need a refresher on that, I recommend checking out our YouTube channel and looking at that previously recorded webinar with my colleague, Patty. When we work in livestock, we can either use that stock Reforecaster, or if you want to build this out as individual transactions, there is an add forecast button to manually enter in births and deaths and aging and sales and purchases. So you can do that manually as well if you'd like. Crops, though, they're a little bit different. You create a new crop tracker for every harvest year. So if I'm currently in 2020 and I need to build up my forecast for 2021, I'll need to create a new tracker for that harvest year. Remember, the reason why we do that is because we know that crops don't necessarily align perfectly to your financial year, that they actually work outside of that. So you want to be able to capture those costs and income and expenses separate to that. So remember that we're going to use a new crop tracker if we need it for a new harvest year. And then we're going to add a purchase for any expenses. Now that purchase is like I said, for any expense. So that could be things like haulage, it could be labor. It can also be the purchase of your direct costs as well. So that's all done by adding in a purchase. You add an application if you're using inventory that you currently have. So if you've got, say, some grain from last year that you're going to be using for seed, or if you've got some fertilizer or chemicals that you've already purchased last year, you add application to pull that out from the product tracker. Once you've entered in your costs, you can then enter in your harvest, which is your yield. So that's going to give you inventory on hand as an output from your season. And then add a sale to sell that. So for example, say we're working in wheat, we may enter in our purchases for the direct costs. We'll enter in the applications if we have any fert or any kind of sprays that maybe I've already got a bit of storage of. I'll then enter in my harvest for what the yield is per hectare that I'm expecting to get. And then I would record a sale to show the cash flow of that and to show that inventory being sold. If you have last year's stock, so you've still got things that maybe the harvest has already happened, but you're selling it in this financial year, selling inventory can include last year's stock as well. So livestock and crops done a little bit differently, and we'll look into the way that that's done in the product in a tick. Your cash flow forecast is done inside of that planning grid. So remember, we were looking at working for production inside of trackers, other income and expenses inside of the planning grid. And that planning grid allows you to work either annually, monthly, or individually. So you've got these 3 different levels of detail. If we start from the top, planning annually, remember this is going to create us a monthly plan. You can use tools and then import to pull in data from last year. So using last year's 0 file, a snapshot if you've already got a plan from last year, or a CSV file where you can grab a copy of the template of the data from Figured itself, and then you can key that into an Excel file and then import that in. So tools and then import, and usually using last year's actuals is a great starting point for building out your plan. Then we build in copying, spreading, and curve tools to help you create that plan. So you can work, say, as a total amount for a year, spread that monthly, or using things like the curve tools. If you have a year's worth of data inside of 0 already, Figured can look at the way that you've spent that money previously and create an account curve based on the seasonality. So if we plan for, say, £14,000 for a year, and Figured knows that you spend most of that in the beginning of the year, it'll then spread that mostly at the beginning and then a little bit at the end, just the same way that you spent that money last year. So having that curve tool is one of those smarts that's built into Figured to give you a bit more flexibility and a bit more control. This is a monthly plan though, so you can enter data directly into the grid. Just change a number and that'll then automatically save as a forecast for you. Or we can plan individually. And when you click on one of the accounts, you'll see at the bottom is this thing that says account schedule, which will show you the breakdown of transactions that go in there and allow you to create individual transactions. So either annually by using the import or spreading tools, monthly by just entering data directly into the grid, or planning individually and using those account schedules to put in lots of detail there. Those account schedules give you custom cash and accrual dates, and they also allow you to create non-cash transactions. To take us to our third point of building out our forecast in 3 places, we looked at production, we looked at cash flow, now we're looking at the balance sheet in particular. And you can find that balance sheet under the accounting tab in Figured in the financial position. Now that financial position is where you see your assets and your liabilities, and then Figured calculates equity for you from that. You create new assets if you're looking to define further detail into one of them. So maybe you've got a tractor on hand already. You would add an asset to record that tractor inside of Figured. And then if you wanted to sell it, you could then have that fund into cash flow because it maps into 0. If you're taking out a new loan, you can add a liability. Or if you already have a loan and you're partway through that term already, you can add a liability, record that it's mapped to an existing loan, and then Figured can show you the interest and principal payments calculated from that as well. We'll look into this in a little bit more detail in a sec when we go into the product, but this is also where we can record the difference between a book value and a market value inside of Figured. We know that for a lot of farms, there is a difference between the accounting and the commercial reality, especially when it comes to valuations. And this allows you to build out a realistic view of both of them. What's it valued inside of zero, and then what's it valued as a market value, so you can have a market value balance sheet. Now that we've looked at building it out in those three separate places, inside of the production trackers, inside of the planning grid, and inside of our financial position, and now that we're familiar with how we have actuals to a particular point, so that's, we then take a snapshot to lock down and confirm our plan. So taking a snapshot creates a moment in time version of all of the data that's on your farm. So all of the actuals and all of your forecasts, and it draws a line in the sand and saves it. Because that captures so much detail, we recommend putting in a description, especially around the things that you were doing at the time, so that you know why it was taken and why you built out all of this detail. We can set snapshots as an annual plan, and that's a figured term, annual plan, to refer to the main plan that everyone who's on the farm, so the rest of the farming team, knows is the primary plan that we're working to. So that could be one that was, say, a bank approved plan, or that could be a plan that had been built out at the beginning of the year. And that's the main one that we refer to, because the rest of this is a live rolling forecast inside a figure. But you can save different copies of that forecast. There is no limit to the number of snapshots that you can take. They are as detailed as you want them to. So we recommend having an annual plan as your core plan for everyone to compare to. Having a snapshot for all the other revisions of your forecast, and then save those different revisions so that you can either report against them or drive through with some of that variance reporting as well. So that's our final step, taking a snapshot, and you can manage those snapshots inside a figure as well. So we allow you to A, have multiple, and B, choose what to do with them. So if you make a mistake in your live forecast, so maybe someone's logged in and they've accidentally overridden a number, you can import your accounts from a snapshot to restore that old forecast. If I took a snapshot and I found that it was wrong or it's no longer necessary for whatever reason, I could then choose to archive that snapshot. But don't worry, we won't delete that data. So if you make a mistake again and you need to restore that snapshot, we can always do that for you, and it's really easy. So you can have archive snapshots, nothing gets deleted. And then finally, you can choose to set one of your new snapshots to the annual plan. So shift that default plan that the farmer is referring to. See, that annual plan tag is really important, because when you have more people invited to a farm, and we know that when people use Figured for budgeting, they'll generally have most of the farming team involved. When you've got multiple people invited, you need to be able to show what the primary plan is that people are referring to. And that's what that annual plan is trying to do for you. Show everyone that this is the main one, and then the rest of the snapshots or the forecast are live and separate. Now that we've gone through that and we've gone through some of these core concepts, we're now going to dive into Figured and actually spend a little bit of time looking at the different parts of the product. We're going to go through that, take our first snapshot, and then from there, I'll show you how that then feeds through inside of reporting. And then we'll open the floor for any questions through Q&A at the end of the webinar. So let's dive in and take a look at the product here. Now I've got my farm open here already. And remember, like what we were talking to, we have that date selected that's at the top of the page showing us what year are we in, what set of data are we looking at, our actuals and our forecast, and what's our actuals to. And you'll see mine has been set to last month. Again, the reason why we normally set this to actuals to last month is because last month will be the last full set of data. Where we're working in today, currently, we're 5 days into February, so that means I'll only have 5 days worth of data inside of zero. So we want to have last month, since that's the last full month. Remember, if we also set this to actuals to none, it's going to set my opening balance as of the 31st of March 2020, so just before that beginning of the year. And I'm going to do that if I want to build out, say, a long-term plan and include some historical data in that as well. But for now, let's set this one to actuals to last month. And now that we've done that, let's spend a little bit of time inside of those operations trackers and take a look at the production income that we were looking at earlier. So I'm going to go to operations and I'm going to go to trackers. And we're going to quickly touch on the 3 different types of trackers to look at how we enter our forecast. Let's start with our beef cattle. And this is the same for any type of livestock tracker. So whether it's cattle or sheep or pigs or deer, it'll all use the same process. I have my actuals to a particular date. And I'm going to use tools, Reforecaster, and that's going to take me through to a page that looks kind of like a stock reconciliation that I can then use to very quickly enter in my forecast. So if I'm planning, say, for the birth of some calves, I can record a birth. Figure will then show me the months that are available. So this is up until the end of my current financial year, 31st of March. I can then enter in the quantities here. So let's say we're going to make that 10. We'll save that. And then that's going to adjust the closing stock that I have for the end of this year. If I then need to move forward into the future, I can use that date selector and use that arrow to then jump through into 2022 and see there that's taken the closing balance. And now it's given me a new stock rec to enter in for that year. And when I work in that, you'll see that I have these other months available to me too. So let's go back a step. Let's look at that 21 and we'll finish off the plan for this year. If I have some sales, I can enter them into here as well. The same goes for purchases or deaths. And reconciling as a column is for you to be able to just enter in a quantity to move it without having to tie it to any financial movements. So that's great if you've got, say, some unexplained numbers from a client. You can use that reconciling to fix them up. So say we use a quantity of 5 here for a total of £500. Entering that in will then save it for us. And now we have that income. And this income from the sale will automatically go into my cash flow as well. So the work that I do inside of my tracker will flow into cash flow. But because we're working with quantities and stock classes and things related to production, we do them inside of a tracker. Like I mentioned, we can either work inside of the stock Reforecaster or we can add individual transactions. So you can work in that way as well if you want to put in detailed specific transactions, including things like weights or notes. So that can be done by adding individual transactions. Now let's head back to our trackers, and I'm going to show you how the milk tracker works for the forecast now. You'll see with the milk tracker, we have our production, our price per litre, and then a total payment. And when we're working inside of actuals, this total payment has come through from 0. This forecast is inside of figured. And we're looking specifically at the month that that milk was produced. So when we look at a cash flow, figured will know that this milk produced in February is paid in March. So it'll automatically do that accounts receivable for you. All we do is we plan by litres, price, hit save changes, and then figured will then calculate that new forecast for you. Nice and simple. And again, we can move forward into the future and we can work inside of the next financial year if we want to move on. And remember that March income that's produced in March but paid in the next financial year is automatically calculated for you. So let's go back. And now that we've looked at livestock and milk, we're now going to quickly look at the crop tracker. Let's go open this one here for Harvest 21. Like we mentioned as well, if I'm creating a tracker for a new harvest year, so maybe I'm doing this for harvest year 22, I'll create a new tracker and I'll make a new crop season. So when we're done with the crop season and it's only calculating for that harvest year, we need to create a new one for the next one. So this could be my wheat 2022. create that new tracker, and we'll then go through the steps of defining the area and planning onwards. So we can say when this starts from. Let's say this begins from the 1st of February, and it's planted in these fields. Now that we've created our new harvest year, we can add a transaction, and we build this out transaction by transaction. Usually when I'm going through this, I find that it's easier to start and think about my costs, so the money going out. So I'll usually start by adding a purchase, making sure that we're working inside of our forecast. We put in things like a purchase date, so when it happens. And if there's a separate payment date, you can record that in there as well. And then add items, and then costs. And we can put in our costs in here. So if I put in, say, a haulage cost, then we can put in either a quantity. So if we want to use it as an amount per, say, hectare or a total. So use 1, it's going to cost me £1,000. And then I save it in there like that. So we can build out all of our costs as well as our direct costs by doing that. And then when you've already got product that's inside of the product tracker, so fert, seeds, spray, any chemicals, you can add application, and that'll take the things that you've already entered into Figured and allow you to apply them and show that movement and the impact it has in profit. Don't forget, you need to add a harvest before you record a sale. And that's because you can harvest stock and sell them individually and separately. So we'll add a harvest. We'll give it a date. Select what product we want to harvest. So I'm going to use my wheat grain. Put in our yields. And we can plan for yields in individual fields if we really wanted to. And then you'll choose what the intended use is for this. Are you going to be selling this? Are you going to be using it for feed? Are you going to be using it for seed? And that then allows you to apply different values for different products. So if I'm selling something, I'm expecting to get some good revenue out of it, so I might maybe value it higher. But then if I'm going to be using this for feed or seed for my cattle or seed for my next year, I would then choose to value that maybe at a little bit lower, given I'm effectively selling it to myself. But you can sit and look at the pricing details if you want to see the data that you've entered in already, if you want to get a sense for the prices that you've already planned for. So let's set this one at the value of £150 per tonne, intended for sale. Or I could split some of that up and I could say actually 150 tonnes of this is going to be used for sale. And then the rest of it, the 170 tonnes, I'm then going to use for feed, and I might value that differently. So I'll save that harvest. And now that I've entered in that harvest, you'll see that it then treats that as income inside of the tracker, but I need to still do the sale because that's going to determine when I'm going to be receiving money. So we'll put that sale date in and we'll fill all of this out, and then that'll give you your sales forecast for your tracker. So we can put this in as, say, happening in December, selling our wheat grain, which goes into our sales account here. We could say plan to sell 300 tonnes of it, and we've got some stock on hand as well, which could be from last year too. Add a price, and then that'll know to pull the inventory out of the oldest tracker first. So in this case, I've got last year's stock that's going to be sold first, or I can change it to be custom and pull in my own individual crop seasons and include any other costs and income inside of that. So if I know I've got a specific cost related to my sale, I can enter that contra inside of here as well. So I can do that at the same time. Treat this almost as if you're creating an invoice, and then it gives you the same flexibility as an invoice as well. So let's save that there. And that's how we enter in our harvests, our costs, and our income. We've looked now at trackers about how we enter in our forecast for a livestock, for a milk, for a crop tracker. Now that we've gone through that and we've looked at these different types of trackers, I'm going to take us into the planning grid now. And it's inside of that planning grid that we then pull through our other income and expenses. So the reason I asked you earlier to put your production income into the trackers is because that then automatically fills it through here for you too. Then your other income, you're able to enter directly into the grid here. And your other costs and expenses can be entered into the grid as well here. And like we mentioned earlier, we can either plan annually, so we can import and we can pull in a figure from last year, from another snapshot, or from a file. We do that annual plan through a file, download the template, and it's going to give you a structure for you to be able to adapt your figures into so that it can be imported into Figured. We can plan monthly by just entering a value directly into the grid. Or if we jump ahead into the future, let me show you that curve. So remember earlier how we said that when you've got some data that's come through from Xero as well, you're able to use that expense curve in building out your plans quickly and Figured. And that's how we can do it here. So we can start by our first month. We're going to spread it by a curve. And if we enter in a total figure here, so let's say £20,000, spread, and then it'll put it in based on that curve that you've entered in last time. In my case, it's largely inside of that first month. Down here in the account schedule is where you can go and play with the individual transactions like we saw earlier. So we can plan annually and use those spreading tools. We can enter figures directly into the grid, or we can work on an individual transaction basis, which is also where we add in notes and things inside of there too. So you've got a spectrum of detail and you just work in the way that makes the most sense for you. So for most people, that'll be using the tools and then import to bring in last year's actuals, and then maybe adjusting some of those figures on the grid or using that account curve. This planning grid, the final point of it is that it can work in both cash and accrual. So if you've got an accountant who prefers working in profit, but a farmer who prefers working in cash, you're both working to the same set of numbers and you just toggle on the grid between the different views. It is important to check what view you're working in though, because if you work in the cash view, Figured will automatically calculate the accrual. So we'll do the profit side for you, or vice versa. So if I work in profit, it'll then put my cash in for me as well. So we work on either cash or accrual, depending on what makes the most sense for our client. And if we head back a step and we look into our 21, we'll look at that actuals 2 point as being really key for understanding what our opening bank balance and back balance will be as we look to plan through into the future. And we can see that by going to the bottom of the grid and you'll see there's that opening balance there and that running total and net cash movement. So we looked at production, we've looked at cash flow. Finally, under the accounting tab is the financial position where you can enter in your balance sheet. That balance sheet allows you to enter in assets and add liabilities. And when you do that, you can choose to map it to an account. So if this is an existing one, say I've already got some land, I could enter that into and map it through to a land account. Or if I have an on-hand account, I can do that as well. And this is just pulled through all of my current asset accounts. So if it's one that already exists, I can map it. Otherwise, I can set it just as a generic asset. And when I do that, it's not going to try and map it to a Xero account, so I can have assets that exist inside of Figured but don't exist inside of Xero. Then put in details like when it was purchased. If it's land, you can put in the area and the value per hectare as well. And key here is that if you're looking at selling those assets, you can record those sales and disposals here as well. Your depreciation, is entered inside of the planning grid into a depreciation account. So that financial position allows you to enter in assets, and it allows you to enter in the liabilities as well. So if you've got a liability inside of zero, you can add in the detail that's involved with it, like the repayments. Or if you're taking out a brand new one, or if you've got one that exists already, you can say, record when that loan started. So let's say I've got a 10-year loan, I can record it starting back in 2015. I can restructure it with different repayment rates, add in that it changes as frequently as it needs to. And then when it comes to my repayments, if I enter in my fixed repayments, it'll then calculate that and put that into cash flow for me as well. So that financial position is where we add in our assets and our liabilities, and we can map them through to zero if we have a zero account already for this too. So we enter in production, planning grid, financial position. The final point, once we're done with all of that, is to take a snapshot. So we head back into our planning grid now. Once we're inside of our planning grid, we're going to use this to take our snapshot. And that snapshot is going to be a capture of all of the data on the farm. So I've been doing a little bit of work in 2021 today. We also did a bit of work in 2022. We also had some zero data come through. And when I take a snapshot, no matter what year I work in, it's going to take a copy of all of that. And that's how we have a rolling live plan. So I'll take the snapshot, put in the detail that I need to have in here, give it a nice description too. And I can set this as my annual plan if this is the primary plan that we're working to. When I remember when I set it as my annual plan, it'll then show to everyone that this is the main plan that we're working to on the farm. So take a snapshot. When you do that and you take that snapshot, remember there's no limit to the number that you take. So if you make a change, you can take a new one if you'd like. And you can manage those snapshots on the left-hand side under the Snapshots tab, which will show you all of the detail that's inside of here. So if I have old ones, I could archive them. That won't delete it, it'll only archive it so we can restore it if we need it. I can set a different one as my annual plan as well. I can set a change to the forecast, to the description of these as well. And I can see it across all years that I may have detail for. So we now know that we enter in our forecast in those three places in the operations tab, in the planning grid, and in the financial position. We know to take a snapshot when we're done with that so that we have a copy of it. Finally, when it comes to doing your reports, you can report on your saved snapshot. So report on your budget in any report. So let's use cash flow as an example. You can view any report as that snapshot. Same with production, same with tracker summary, same with cost of production. So we can show a particular snapshot from a year. Here's our test that we were working on. And then run that report for any year. And that'll be our snapshot that we worked on. There's our live budget or that forecast that we have. And then just the same with figured reports, we can share that, pull that out as a PDF, save it if we want to add commentary to it. But I recommend checking out some of those additional options because there'll be some that you'll be able to then add like quantities to or add more detail to. We mentioned once that the top three reports that are inside of Figured are the profit and loss, the cash flow, and the variance report. And that variance report is the main reason why we put in all this effort for the zero integration, why we have our forecast using the same accounts, because that live sync with zero means that when you run this variance report, it's immediately using the most up-to-date set of data compared to your forecast. And you've got all of these other reporting options inside of here too. Because your actuals and your forecast are on the same page, when you run that report, there's no reconciliation, there's no manual entry to match them up together in Excel. It's already done that. And it's that variance report that then allows us to quickly run comparisons, whether it's month or year to date or full year, and you'll see all of these different options, and you'll receive that in the pack that comes at the end of this webinar as well. Like we mentioned, when you need to share that report, pull it out as a PDF so it can have things like your logo on it. Save that report so you can have a copy of it at this moment in time with commentary, or download CSV if you want to have a play with those numbers inside of Excel. So that takes us to the end of today's webinar and the final part of going through our now, our where, our how. As a recap of this series, now that we've come to the end of it, our first webinar took us through a tour of the product, looking at how the now, where, how is used across the 3 areas of the product. We then went through with Patty, creating trackers using crop seasons and livestock trackers to drive profitability on farm. We then looked at using scenarios inside of Figured for building long-term 5 to 10 year plans. Now we've looked at how we put that plan in action by creating forecasts, by having those zero actuals flow through to Figured and being able to create a variance report. And that now takes you through all of the core parts of Figured. Thank you very much for joining us on this webinar journey. We hope this has been useful to you. If you have any questions, remember to reach out to our team using the in-app chat bubble. With that in-app chat, we can then send through other videos, other documents, previous webinars, and things that you'll find useful. Thank you very much for coming to today's webinar. Now that we've gone through all of that, I'd like to open the floor to any questions if we have a Q&A. Otherwise, enjoy the rest of your week, enjoy your weekend, and we look forward to seeing you come again to a Figured webinar into the future.